So, what if you could hold up a perfect mirror to your own brain, to your own decision-making? Well, today we're going to dive into a pretty fascinating experiment where one trader did exactly that. He unleashed a personal AI on his own trading habits, and you won't believe the hidden patterns he found, things he was completely blind to.
And this really is the big question, isn't it? I mean, most of us, especially in high-stakes stuff like trading, we like to think we're making super rational, logical decisions. But what if our wins and our losses are actually being driven by these subtle, totally invisible habits that we just can't see in ourselves? To find out, we're going to follow the story of a crypto trader named Ron. He decided to put this whole idea to the test with a 30-day experiment. Think of it like a personal quest to see if an AI could give him a real edge, just by analyzing his own mind.
So the problem Ron was trying to solve is something every single trader, and honestly every single one of us faces. It's those invisible forces, right? The ingrained biases that secretly shape what we do, all without us even realizing it's happening.
It's such a fundamental challenge, whether you get a little overconfident after a big win, or maybe too timid after a loss. Our own behavioral patterns are the absolute hardest to spot. It's like trying to read the label from inside the bottle. You just need an outside perspective. And this is where the story gets really, really interesting. See, Ron's outside perspective wasn't some high-paid coach or a mentor. Nope, it was a personalized AI assistant that he named Jeff. This was the special tool he picked for his quest.
Now, when I say AI, don't picture some giant billion-dollar supercomputer in a lab somewhere. Jeff is what's called an OpenClaw agent, and what that means is it's a consumer-grade AI, something you can actually run in your own secure private space. Its whole job is to analyze text and data, and in this case, all of Ron's trading notes.
Okay, so the stage is set. For 30 straight days, Ron stuck to this really simple but disciplined process, all to see what, if anything, his little AI assistant could dig up from the raw data of his daily trades.
And the workflow itself was incredibly straightforward. First, Ron logged every single trade, the wins and the losses, with super detailed notes. Second, he dumped all that data into a centralized, private spot. And third, the fun part, he just asked Jeff, hey, go find any recurring patterns or hidden variables in there.
All right, this is the moment of truth, right? A whole month of detailed trading notes, emotional states, wins, losses. It's all been fed to the AI. So, did it just find a bunch of random noise? Or did it actually uncover a real hidden edge? What did Jeff find? Okay, let's get right to the results. The AI just churned through all of Ron's notes, his feelings, what the market was doing, the outcomes, and it started to pinpoint these key variables that were popping up again and again, strongly connected to his wins and losses.
And the patterns Jeff found were so specific, it's kind of wild. It turns out Ron tended to win when there was a lot of market activity, and, get this, when he traded on Tuesdays. Yeah, Tuesdays. And on the flip side, his losses were almost always tied to him trading against the market's momentum and holding trades past midnight.
But here it is. This is the single most powerful insight of the whole experiment. The AI told Ron, flat out, the most significant variable in losing trades is negative delta. In plain English, it told him he was consistently trying to catch a falling knife, which is a classic, high-risk trading mistake. He was betting against a strong downward trend over and over again.
So what do we make of all this? Did Ron just stumble upon a secret formula for guaranteed profits? Or is this just an interesting illusion, a fluke in a small pile of data? Let's break down the final verdict. Look, on one hand, the potential here is huge. I mean, the AI nailed his personal blind spots, it actually put numbers to his behaviors, and it even found weird stuff like that Tuesday effect. But we gotta be realistic. This was a pretty small personal data set. And remember, correlation is not causation. Most importantly, you still need a human to look at these findings and figure out what to do with them.
And that really brings us to the crucial point of all this. The AI's true value wasn't predicting what the market was going to do next. Its value was in being a perfectly objective mirror. It just showed Ron his own habits, his own tendencies, with cold, hard data. It wasn't a crystal ball, it was a mirror.
And that leaves us with a really fascinating final thought to chew on. As these AI tools become more and more common, maybe their real power isn't about giving us all the easy answers. Maybe it's about helping us finally ask the right questions, the much, much harder questions about ourselves.